This is a live special report. My name is Moe Agostino, Managing Commodity Strategist with Farms.com Risk Management. We're live down in the Decatur, Illinois at the Farm Progress Show, and we just wanted to give you a quick update on the markets. We had a big day today. Beans at one point were limit up. Corn was up as much as 35 cents at one point. They did sell off at the end of the day, but we did close above $5 resistance. We did close near resistance at $13.90 on the beans for November 13. I think the close was about $13.89. So what's going on? Well, we took a tour at the end of July and we called the East the God's country, the Garden of Eden. It was lush and green and everything looked good, but a lot of our farmers that we work with here in the U.S. basically have been telling me that they haven't gotten any rain since, well, for the past month of August, and over the weekend, many were concerned that it was going to get really hot and dry through the Labor Day weekend, 100+ degrees with no moisture in sight, and of course that heat came a lot earlier than everybody thought. So on the weekend, overnight, on Sunday, there was starting to see some panic buying from the funds, and you're going to get heat throughout this week and into next week for the next 10 days. There's no moisture in the weather models. They become very dry. If you look at a U.S. drought monitor map, at the beginning of the year there was no concerns for the U.S. Corn Belt. All of a sudden now that drought has traveled east again. It's maybe a little too much, too little, too late. Who knows? Probably in that 41, 42 yield on beans. It's going to affect the beans more than the corn. We've gone through that pollination stage already, but many producers are complaining that maybe the tips won't get filled. So if we're at 41 bushels per acre on the beans, we're probably at minimum pipeline levels, 140, 150 million bushels. But if we're at 40, and it's going to be tough to guess that, we'll know that in the next couple months, we're below minimum pipeline levels. And what the market has to do, has to ration demand with higher prices. We're going to have to break 1409, the high on September 14th of last year, to get it much higher, but I cannot rule out $14.50 to $15 on beans. If maybe you're already booked and you're concerned, you can buy a call option to hedge yourself. But in the last couple years, we've seen these markets factor in the news. I think today we've done a little bit of that. We've got two gaps in the November daily futures chart. Look for two more gaps. The third is runaway. The last one's an exhaustion gap. That's when you get too close to a peak in this market. Last couple of years during Farm Progress, or that first week of September, we've seen peaks. 11 was a little dry, 12 was really dry, getting a little dry in the month of August in 2013.
This video is brought to you by Farms.com Risk Management, where we provide leading grains and livestock commodity marketing advice and services. Sign up for a free trial of our marketing recommendations and newsletters.